Okay, welcome to this second video in Unit 2. What we're going to look at now is how to put the whole of the profit and loss account together. I'm going to start though by looking at some of the useful feature in Microsoft Excel where you can have more than one sheet in a workbook. If you look at the very bottom of your screen, you will see sheet names, sheet 2. What I do is double click on that, and I'm actually going to give this the name manufacturing. This was from the first video. Okay. A little bit of work, we'll get there. Manufacturing account. Now next to that you see a plus sign. So I'm going to click on that and you'll see as it comes up it says new sheet. Let's click on it. Double click and we're going to make that the income statement. And we'll click on the next one, double click, and we'll make that the expenditure statement. Now, one of the purposes of using so many sheets in one workbook is sometimes the details in a real busy business can be very, very lengthy indeed, and as soon as we can beat it, if you make a mistake, by the way, just double click and correct the text. But the details will be very, very lengthy indeed, and breaking your data up into sheets does make it more manageable. My fourth sheet though will be the profit and loss account. This is quite important because I'm going to be using this as a summary of the other three accounts. So important, in fact, I'm going to be moving it to the front, but we'll deal with that a little later. Let's go back, click manufacturing account, there we have it. That is the cost of the goods produced, which was $4,490 in my example. Now I'm going to go to the income account. Okay, and what we're going to do is summarize the income. I'm not going to put too much detail, but as I said, in reality it can be very lengthy indeed. Okay, so save video time. That's the basic data that makes up the income. So my usual style, I'm going to merge and center that. Let's give it a nice border. Presentation is important in accounts, as with anything. It's widen cell B so we can actually get all the text into the cells in that column. Okay. I borrowed this from the book's units. So I'm going to highlight that and I'm going to right align the text here. The rents receipts. Alright. So that's income. Imagine we're subletting a part of the premises. So let's have $300 of income that we've actually collected in rent. But what we're going to have to include is any rent that we collected last year that belongs to this year. This in accounting is called the accruals concept. So in other words, we collected the money last year, but it was for this year's rent. We've also collected money this year, but that's for next year's rent. Let's make that 90 in red because we're going to deduct it. So what's the actual income? Well, the actual income is what we collected this year plus what we collected last year for this year's rent less what belongs to next year. So that's the actual income. All right, it's not receipts, it's income. Now, a little bit of discount from suppliers, and we don't want to clarify this. It's cash discount. So we've had the invoice, but because we might have paid a little earlier, they've rewarded us with a little cash discount. All right, let's put a little modest 40 on that. So let's add those figures together. Press equal. It's this D7 plus 40. That becomes our income. Right, I'll box that lot the same way. Let's just move that over to there and rebox. Right, so it's absolutely clear. This is the figure we're going to need in our profit and loss account. Now next we'll move on to the expenditure statement, and at the tab at the bottom we click on that for the next stage. Okay, here we are. Save a little time. I've put the text in and I've formatted it. Let's start with the cleaning wages. Alright. How much have we actually paid out? Well, let's suppose we've paid 500 out. But the wages we owed from last year belongs to last year's expense. So we mustn't include them in this year. But we must also add the wages that at the end of the year might still be owing. So the actual cleaning wages will equal what we paid out minus the wages that we paid out this year, but was in fact for last year's cleaning expense. But we add in the wages that we still owe for this year. In other words, expenditure is what we have spent on wages, not what we've actually forked out in the way of cash. Let's deal with the electric. Let's put 200 we actually paid, but I'll move that over there. But if our electric bill's just turned up, we'll say it's for $30. So in fact, the true electric expense is the $200 we paid plus the bill that's just arrived. Now, an interesting expense is depreciation. If you remember, when we buy fixed assets, it may cost us cash or money from the bank, but it's not an expense because the value of the asset carries over from year to year to year. And what we're interested in the profit and loss account are those things we have to spend money on for which there's no lasting value. But depreciation is a loss in value of assets, and that is an expense. No cash is lost, but it is an expense. Let's put 120 in. Now our insurance. Okay, let's suppose we spent 120 paying the insurance bill. But in this case, we actually paid 80 from last year into this year. So we paid in advance. That's how insurance works. You always pay your insurance ahead. And we paid a bit for next year. So we'll make that 100. So the actual insurance cost is what we paid, plus what we paid last year, hasn't gone through this year's cash book, less, and we don't want to include next year's insurance. So these are fairly straightforward. Stationery and accessories. There may be bits of stationery left, but the stock of stationery can be so insignificant that we can just take it as being cash. Fuel for the car, again likewise, don't go looking into your tank to see how much fuel is left. It's immaterial, and we do not spend dollars and dollars trying to save those odd few cents. Interests on loans, now you see we haven't paid it, but it's still an expense. Let's put 40 in on that as well. Our broadband internet expense, we pay $50 in fees. So our total expense for the year, using the auto sum, click sum, all these figures added together, highlight and press enter. Again, let's make that a little bigger than the rest. Let's box all that, tidy it up, and there we have it. This becomes the expense which we will carry to the profit and loss account, and that's the final, going to be the final section of this video. Right, so here we are at the profit and loss account. Now again, I've put the figures in, I put the data text in, and apart from a little bit of for the formatting, it's pretty well a summary in shape. There are two bits to this, a trading account and a profit and loss account, and don't be surprised if you see published the term trading and profit and loss account as a single statement. Let's start with the trading account. Now remember, from the unit we are looking at a figure that will give us gross profit. That's the difference between sales revenue and how much those sales cost. So let's start with the cost of manufacturing goods. We've already done that. It's in the manufacturing account, and this is where multiple sheets can come in extremely useful. So what I'm going to do is say, well, we already got that figure, so rather than type it in, I'm going to press the equals sign, and then now watch carefully. I'm going to go back to the manufacturing account and click on the cost of manufacturing goods and press the tick up here. And there it is, the figure's in there, not formatted, but the figure is in there. Now let's go to the income. Right. Exactly the same. Press the equal sign. Go to the income statement. And don't, rather than type the 300, let's just click on where that is and press enter. Done. Expenditure equal. Go to the expenditure statement. Click where the figure is and enter. Now the point is, if you change any of the data in the other three sheets, this summary statement, which is the profit and loss account, changes automatic. So let's put in the missing figures. The opening stock of finished goods, let's put in a figure of 1,200, and we'll make the closing stock 1,000. Cost of finished goods then becomes equal to the opening stock plus the cost of manufactured goods. Now, those two combined give us the cost of the goods available for selling, but we can deduct from that any stock left over. Right, now let's suppose our sales for income was, let's be nice to ourselves, 9,000. So the gross profit is now equal to that 9,000 minus, click on the figures, don't type the answers in. Okay, so gross profit equals sales minus cost of sales. Now, this gross profit is in fact brought down in the profit and loss account exactly the same figure that we've just calculated. So again, equal. Click on where the gross profit is, press enter, job done. So in fact, three of these figures are actually derived from other cells either in this sheet or somewhere else in the workbook. Our net profit will equal the gross profit plus any income minus expenditure. And there you go, there we have it. Gross profit, let's make a point of highlighting those figures, they're very important. And then of course we can go on and carry out some analysis on that. Okay, that's it.